What's up, everybody? Wanted to do a quick video about two dividend stocks that I bought. If you've been following me for a while, then you know my main income is trading, right? So I like volatility, I like the movement, and that's how I roll. Not to really just put it that way, but yeah, that's how I rock it. So I like volatility, I like movement. I'm not really a dividend guy, but the certain market we're in now. So my investment account, a lot of things have closed just because a lot of things, when things pumped up so high, even I was talking about on Don Fran's show, like my other YouTube channel, like we're just at unrealistic areas. Like, and not like, how every investor loves to say like, oh, we're just detached from reality. Like we really were. Like the hype just came in and we knew the hype was leaving. So as that hype started to leave, investment stuff started to close. So kind of building that back up right now. And the cool thing about dividend stocks, right? Now, there's certainly some dividend, I don't call them dividend junkies, there's got to be a better word, but there's a dividend community here on YouTube, and they swear by them. And another thing I really don't care about dividends is just because almost everything beats them. It's not even a fantastic one. Growth smokes dividends almost all day long. And so if you look at the data, like it's cool, and they certainly have their place, but to put and what we're going to talk about going forward, I guess, is I kind of want to talk about this. I've talked about this in a previous stream. Like if this is your investment, remember the old food pyramid? Like let's do from here and below, like that's your percentage portfolio should be probably in index funds if we're talking about investing. Those are things you can dollar cost average into because they're managed. Somebody else is managing them. So you're doing, actually, if you ever want to borrow against your shares, we're probably talking something like that. So this is not financial advice. This is nothing. You just do whatever you want. This is kind of just my thought process quick in a video. If I can make you guys super investor or super traders in just one video, I promise it would be out there. So you just got to hang tight, watch them, take it all in, and then build your own opinion. But right now, if we were to keep it simple, let's do 50% index funds. Let's do 50% dividends. And then this top part, the sweet spot, that was the candy or like the sugars, right? This thing made so much sense other than it was loaded up on carbs. Neither here nor there. This is your individual stock picks. So if you want to get weird, like you want to buy, I don't care if you want to buy Tattooed Chef, if you want to buy Tesla, you want to buy Peloton, whatever you want. You've done your analysis, you've done your research, you think this one's banging. You tried the cauliflower pizza, you love it. Cool, so you buy that one. You pull up to your local Starbucks, turns out it's got a long line. Surprise, surprise. But man, it's got a long line. Their stock's got to do well. So you individually pick that one. Allocation-wise, you divide all those up in between this. That's how you don't get smoked. Now, if you look at the data, you get historically destroyed, right? There's been over 100,000 tickers in existence. There's just over 6,000 right now. Last year, there was over 7,000. They're getting delisted left and right. Drive Shack is one that just got delisted. I know it's a popular one a lot of people like to talk about. Smoked, right? Part of that statistic. Picking stocks is actually a hard thing to do. So I say all that to say, like, the index funds, like the S&P, the top 500, the NASDAQ, the 100, it's leaning more towards tech. Diversify a little bit like that way, because as those companies get delisted, they get moved out, the new one comes in. They have their own criteria. If you don't know how to build your own criteria, they do, and they manage it. So that's something you can dollar cost into and just keep those shares rolling. You got the sweet spot up here, and then we're going to talk about dividends. Again, I'm no dividend pro. So there's an aristocrat. They've paid their dividend. They haven't missed one in the last 25 years. These two I bought today are not. They're actually really new as far as the dividend world goes, but they did have pretty successful launches. But the cool thing about dividends and where I think their place should be is you get this little chunk of dividends right inside here, and it smooths over some of the mistakes right here. You got your growth right here. Things are doing good. Dividends, they get you that income, right? Hopefully you have drip turned on, so it kind of snowballs itself. But if you don't have drip turned on, it kind of makes up for you bought Tattooed Chef because you thought it was cool. Makes up for that mistake. Now, we're not dollar cost averaging into these because that's silly. That's literally throwing money into a burning house. You're like, no, I promise this is going to be good. So dollar cost average in the index funds, that's a thing. This is not, and I mean it. When people say like it's about time in, not timing, that's false. Index fund, it's about time in. You don't have to worry about timing that again. But Individual stock picks, it has everything to do with timing, picking the right one, something not taking it over. That's still being relevant in a year or two. But when you put your allocation in there and it just sucks, it was small. So you just got these dividends just churning away. These are your little shovel, right? Your little garden shovel. And it really smooths over some of these mistakes you make. So anyway, we'll probably do that in a whole other video. So you'll hear that again, a little more detailed. So I bought Jepq and JEPI. JEPI just sounds funny. So the JP Morgan NASDAQ Equity Premium Income ETF. So think Q, think NASDAQ. JEPI is a little bit, we'll go over their holdings. We'll skim through them a little bit. But JEPI, think S&P. JEPQ, think NASDAQ. If you follow my trading channel, if you do join Don Franz Show, again, this is all pre-recorded stuff. Don Franz Show is where I go live. Again, just from me. Trading, main income, profits from that, pay the bills, pay the taxes, extra goes into investment account. I think everyone should have an investment account. But if you follow that, you guys know something I'm doing like inside my mentorship group is just to prove a point about selling covered calls. There's definitely a way to do it, but you definitely take on risk by holding the shares. And that's actually what this particular one shows off, which I know probably sounds bad. But you buy the shares, you sell a call against it. I call it children's allowance. I call it free money. The shares are your house, and the options contracts you sell against it, call it rent. You don't want to have just a house vacant. You want to collect rent on that. The house price will fluctuate. It'll go up and down. The up and downside of this, while the NASDAQ is selling off like we've been watching, you see this is already like trending down. If you've been following me for a while, then you know I usually laugh at people that buy stuff like this. Like it's going from the top left to the lower right. Where do you think your money's going to go? But this does pay a monthly dividend. So for those of you guys that have that ADD factor like I do, it's another reason I don't like dividends, because they just sit in your account forever. And then quarterly they pay some. At least monthly, you're like, all right, I just got to make it to the next month, and it just scratches that itch, I guess. Keeps you from trading it. So I think this equates to 9%. But each month, so far it hasn't missed one. We're right around 50 cents. So it's gone up and down. But give or take, right around that 50-cent mark. So they have shares and ELNs, which is an equity-linked note, which will probably be a whole other video in itself. The cool thing about that is you pretty much imagine your block of capital and selling a call against it, but the block of capital doesn't go anywhere. What you're seeing here is shares. They have shares, sold calls against it. While those shares go down, you're collecting that free money, but your shares are still going. The underlying is still going down. Just to give you a quick, let's just pull this up real fast. So this is actually just a tracking thing I'm doing in the mentorship group. So I bought Tesla, 100 shares at 198. That's how much it cost, $19,896, and selling options contracts against it. So you're basically buying an ETF that does this for you. So you can see here, you can track it. It depends on how you want to look at it. I still have 100 shares at 198, but I've also collected 2,600 in rent. Or my average cost is right now 172 because I had to pay this one. So before this one, this one's already green right now, but since it's not, let's go with the last full line right here. Average cost, we'll call it 170. So what they're doing is they're doing this, but paying you this dividend. They're keeping their chunk, you're collecting yours. So of these ETFs, there's always a price to it. You'll hear dividend people say this is a more expensive one, but you get to keep this column. Well, not keep it. You get a portion of that. That's what they're paying out to you in dividends. But they have let's just pull up. This is JEPQ. So their holdings right here. So again, NASDAQ, Microsoft, Apple, Google, Amazon. This is their ELNs right here. Nvidia, Meta. So Meta and Tesla getting smoked. This is how many shares they have. Okay. So they're rocking 177,000. Hey, step your game up. Kathy Wood just bought all of that. I'm just kidding. Please don't destroy this. So Synopsys, AMD, Intuit. I almost said Intel. Broadcom. You can see a lot of tech stocks in here. Well, NASDAQ, naturally. So they have this many. They have 11 million of cash. I was like, wow, that's a lot of shares. So anyway, they have these, and they're selling calls against it. So this particular one, I do think will be good for the next probably a year or two, because when we do, the downside to this is when we do bounce, you know this as well, you cap your gains. When that stock bounces and goes up, if the stock's here and you sold this options contract and it goes up like that, well, it could go to the moon. It could pull an AMC, it could pull a GameStop, and those shares are right there. They get sold at that strike price. So it does cap it. So in a market where we're just raging up, so let's look at this. When did we, let's get off. This one, so this one, okay, this one's only here in the crash. JEPI, you'll see when the market's flying up, you're not seeing the aggressive growth, but it's sideways or down. This one would be all right. I think a lot of the I've seen a couple of YouTubers talk about this. They're talking about using this as income, and I would definitely talk to a CPA about that, because in a traditional dividend account, right, or a qualified dividend, I'll give you this piece. You have to own it 60 days before dividend, 60 days after, and that becomes a qualified dividend. So if you're in a taxable account, this is a monthly dividend, so that's going to just consider that right off the top. You're just consider that might as well be talk to your CPA about how much that'll be. I was gonna say might as well be 30 cents. But nonetheless, still there, just something to take into consideration. If you're going to pump a bunch of money into this and collect that income, monthly income, as this does go down, dividend mindset is a little bit different. It's more about how many shares you have, kind of more of an accumulation phase. Definitely be careful, because it's definitely not financial advice. Hopefully, I'm just giving you guys enough ammo to do your own research. That's what this is really for. So right now, I do have, I tell you my average cost on these. I bought some yesterday and today. Let me get this open. Right now, I just have drip turned on. I don't know. I had some capital, and I want to start deploying it. I do want to build up the dividend side of things. All right, so JEPI 5414, JEPQ 4090. So that one's red. So rock and roll. Let's move on to JEPI real quick. JEPI just sounds funny to say. You can see I've already zoned this one out. We were looking at it a while back. So let's remember 2021. We are raging up. Remember the volatility box? Is that what that was? Markets definitely went up a lot higher than this. Now, if you have your dividends reinvested, you should, it won't beat, it won't even meet, but it's going to hang with the S&P. This particular one did, because remember, it's going to pay out. It's just going to grow more shares, so you'll still get that growth. But right now, I felt this was a good level. I do think we're probably going down anymore, so I would expect this to sell off more. Again, more accumulation phase, a little bit longer game. These are fairly new, so to track any long-term history on this, that in itself is taking on its own risk just right there, because we're not talking about an aristocrat. They've paid the last 2 decades. They have made every payment. Because people, when you chase dividends, some people will chase dividends and they're going after these high flyers. This thing pays a 20% dividend. Like, come on, guys. Didn't you learn your lesson with FTX? Like, yeah, I'm sure they want to. I'm sure they're going to try. How many dividend payments have they actually made of that? Just remember, we're in reality, right? If it sounds like magic, or it would need that to hit that, I would start questioning that. If it sounds too good to be true, I promise you it is. I don't want to even oversell these. They just sound decent to me. That's why I bought them. That's why I'm even making this video. But I do think these will go down. I do want to buy more. And I will at this $50 level as well. But back to what I was saying, I don't think the market springs up. I don't think we see a 2021 rally. And they don't actually say how they sell calls, so I imagine something like I do. Because one of the complaints another YouTuber had, and this is a perk of knowing the trading world, is that he goes, I don't know if they're selling 1% out of the money, or 2 or 5%. And like, that's not how this side of things work. Like, you can take all that data from the options world and you know where the risk is at. We talk about it all the time. Like when we look up SPY right here, this is where market makers are pricing in risk. Every one of these green numbers was me selling an options contract just outside these blue lines. So you can take that data and think, okay, everyone's got their chips on the board. Here's where we're likely going to stay into one standard deviation. I bet they have. Now, I always sold 1.5. Take the standard deviation times 1.5. So if it was a $10 move, I sold the $15 move outside. And I bet they're doing something very similar. Again, that's me shooting from the hip, just taking a wild guess. But I thought that was actually really cool. So actively managed, not doing some stupid arbitrary number. And not to say that YouTuber is stupid for even asking that. But if I did see something that silly, I would be making fun of this ETF. Without a shadow of doubt. That would be the dumbest thing I've ever heard. All right, so this is the premium income. Let's go over JEPI real quick. So 129, I guess, stocks, assets. Oh, I can't say stocks, assets, because they do have some. They should have some ELNs. Yeah, right inside here. But so I guess they're top holding. AbbVie, AbbVie. I've heard so many people say it weird ways. I don't know. The Progressive Corporation, ExxonMobil. I kind of feel like that's a hot potato trade, but I do actually like Exxon. So Coca-Cola, Bristol Myers, United Health, Healthcare's on fire lately. Hershey's, Honeywell, Procter and Gamble. So this is a very chill portfolio without even going through all of it. So there's some Microsoft, there's one tech. Lowe's I like just for a dividend in itself. So UPS, Texas Instruments. That's where you get the best trades. A little bit of Google. So Google's way down here in the 48 mark. Johnson & Johnson. I don't know if I can even say that name without getting demonetized. Anyway, you guys can Google all this and look all this up. But you want to talk about diversification. This is a very diverse portfolio. So they're taking all these, they're selling options contracts against it and paying you out in that dividend. So anyway, I don't plan on using it for income. I'm going to turn that snowball on. We'll see how things shake out, and then maybe I do turn on. Maybe I turn drip off, and then maybe I use those funds to buy another one. I always want to keep that, like I said, that tiny shovel. I always want to keep it churning. So as of right now, until something crazy happens, it goes down, I'm going to buy more. Again, we're not making silly statements like I'm going to back the truck up, we're going to take the mortgage out. We see silly stuff, and I don't know if people are serious when they say that. But I expect it to go down. I expect the markets to go down. But I expect to accumulate more during that phase. And then hopefully by that, when the markets are going up, I got a nice little chunk. Maybe I use that to buy more Lowe's and Clorox and other dividend tickers that I do like. I saw a YouTube video a long time ago, and I'm going to have to copy this guy because I actually kind of like the idea. He timed it out. I wish I knew your name because I would definitely shout you out. I thought the video was put together very well. Timed it out how to get a dividend every month from stocks that pay quarterly. He's like, if you buy this company, it should pay on this month, and this company should pay that. And so either way, you get a dividend every month. And that would be a pretty cool retirement to have something like that set up. So I do want to start building that up now, so I can just live off this. I'll always trade forever because, well, that's just me. But it would be nice to just live in I call it fantasy land. You got just dividends paying for everything. You're just sitting down, making that passive income that YouTubers love to promote, I guess. You got to have millions in your account to actually have somewhat of a lifestyle that is not living in a tent in California or on a beach. So it's not like you can just toss 50 grand into here and live happily ever after. So any of my younger followers, best time to start now. Imagine if you just started buying similar stuff, something of the sort. You just started putting it to work now. By the time you are 50, that won't be a dream. It'll just be, I get to do this. I get to enjoy my life. Most people retire when they retire, and they're this far away from an old folks home. Imagine retiring and hanging out with your kids. You might not have them yet, but that'll be the coolest thing in the world. You get to spend time and enjoy your life. Anyway, I'll wrap it up here. Anyway, I bought those two. Gonna buy more. I guess I'll keep you guys posted. Let me know in the comments down below. What other dividend tickers do I need to look at? Really break down. Let me know. And if I end up buying it, I'll make a video. Let you know. Have a good one, guys.